LAD here, and we're going to do a lesson on how to double your money risk-free. And what I mean by risk-free. So, if anyone ever says to you that they can double your money, it's probably a Ponzi scheme. And as long as you're in early, you're going to make money. However, if you're in late, you're going to get bagged just like the guy that got you involved in. And that's why he's trying to recruit you for a Ponzi scheme. Okay, I'm going way off topic here. So, how to double your money risk-free. And what do I mean by risk-free? That means that money, okay, will not leave your bank account. Money will go into your bank account, and no matter what happens, okay, you will make $0. Worst case scenario, you make $0. Okay, but there's a chance that you can make $4,000. That'd be pretty sick, right? So make sure you stick around. I'm going to cover exactly how you can do that. So how to double your money risk free. So I put out 2 videos regarding this trade, but we're going to break it down in detail. So here's Google right here. Okay, so we can see every time Google comes down to the bottom of the range here, it bounces. Okay, bottom of the range, bounces. Bottom of the range, bounces. Bottom of the range, we don't know if it's going to bounce yet. Okay, and the same goes for the top of the range. Every time it hits this top range here, it comes back down. Top range here, comes back down. Top range, comes back down. But now, just by looking at the chart, right, you don't have to know anything about technical analysis, right? You can see that when it broke the top of the range, right here, what did it do? It went up and to the right. However, it had news come out. So earnings came out and the stock decided to gap down because investors did not like the earnings. So now that was a lot of talking, but how can we make this really, really simple so you can execute on your next trade almost flawlessly? You're going to mark the range and you're going to write calls at the top. Okay. And then you're going to write puts at the bottom. All right. Remember, just the bottom of the range and everything in the middle equals chop. Okay. So that means anything in this box, you're not going to change. You're not going to trade. If it breaks the top of it, you're going to buy calls. Break the bottom, you're going to buy puts. And that is really it. It's really that simple. Okay. New traders love trading chop. Okay. And it's ping pong. All your gains are gone. Okay. There's a reason why it rhymes. So let's break this setup down even further. So first, we're starting with the daily chart. Right. I always start with the daily chart. Now let's look at our higher time frame setup. Okay. So we can see right here, Google reported earnings. So I'm going to write ER up here just so we get the full picture of the story. Okay. Reported earnings and gapped down. So we can see that this is a bear flag here. Now, people will say technical analysis doesn't work. I don't know where they get that from because this is a bear flag. Okay. A bear flag looks like this and a bull flag looks like this. It really doesn't get much simpler than that. Just think of an American flag for bull flags, and for bear flags, just think of, I don't know. Okay, so we can see it's forming a bear flag here. And what are we going to do? We're going to notice something on the chart. First thing you're going to notice is going to be the word put is written right here. Okay, we see the word put. Where does that word put come from? It comes from where we wrote puts up here. It's the same part, just on a different time frame. So if this was a long setup, we would see calls would be written up here. You can do this all through TradingView. Just set alerts. Okay, so we know we're going to buy puts. Once it breaks the bottom of this range, it's forming a bear flag. So let's see what happens. It breaks it. So this is the bear flag. It breaks it on the 10-minute chart. Okay, and remember, we're not going to be smacking stuff. So if this is our key level right here, so this is our key level for the short, okay, we're not going to be buying puts as soon as it crosses this level. Because what happens, a lot of the time, what happens is when you do that, you get a big old schwick in your mouth, okay, and you really don't want that, okay, especially with 0 days. What you want to see is you want to see it come down clearly and obviously break it, come up, give you a pop to short, and then come back down. That's the secret there, right? Too often traders come in, they're trying to force it, right? They're trying to jam it under that level. Okay. You are not a hedge fund. You're trading on Robinhood. Stop. Okay. Stop. Wait for it. Wait for everyone else to figure out if it's going to break. Okay. Let them figure it out. Think of them as your sacrificial lambs into the possible Schwick slaughterhouse. Okay. Think of them like that. Let them figure out if it's going to go. Okay. Google is a okay? It's a $1 trillion company, I think, or at least it's definitely over 1 billion, okay? And you can't even count to 1 billion without falling asleep, okay? So it's going to take time to move. It's not going to be linear. I've yet to, in my 5 years of experience in the stock market, see a stock just go down forever and ever and ever, okay? There's always a bounce, always a bounce. always a bounce somewhere along there. Okay. Remember, you're on Robinhood. You're not a hedge fund. Just wait for the pop. Okay. Wait for the pop. Here is the pop. Okay. And we can see that is exactly what happened here on Google. Make it nice and clean so you can see. All right. We got our pop to our key level. We can all see that. Let me switch my colors. Here's the pops. Okay. To the key level. And then what happened? It flushed out. Okay. Now, if you were to come in here, right, and as you know this is your key level and you were going to smack it, okay, right in this area, look, you got the schwick in your mouth. You don't want that to happen. That's a bad time because what's going to happen is it's going to scare you. It's going to shake you out of the trade. And then you're going to think, oh, maybe Google wants to reverse. And then this whole entire move, you're buying calls the entire time and you just blew your account. Kapoof, all your money is gone. So we can see we entered puts up here, okay, 185 puts. All right. And they paid 105% until this red arrow. And you can see, me and my team, everything's put on the admin floor. You can see right here that we have noted the Google small bear flag. Okay. And it's exactly what we're referring to. And it's really that simple. So you don't even have to know this Google range is going to break. I'll tell you when it breaks. It doesn't get much easier than that. Okay. So, a lot of times, people will, how do I say it? Think that there's only one entry on a stock. Okay, there's only one entry. It's like, yo, Ellie, this was the entry. Right here. That was the entry. That is false. And I'm going to tell you why. Okay. As we previously mentioned on a $1 trillion company, okay, there's a lot of movement in this stock, right? There's going to be some pops, there's going to be some drops, there's going to be some pops, there's going to be drops. Okay? All those investors, okay, are trying to get on the side of momentum or on the side of trend. So all you have to do is follow the trend and be on the right side. So there's not just one entry. I'm tired of traders, it's like, oh, I missed this entry. No, there's like 5 entries on this chart. No joke. Okay, let's count them while we're here. Okay, so here's entry number 1. All right, entry number 2, entry number 3, 4, 5, 6, 7. Okay, there's 7 entries on here. Okay, it's a bearish trend. It's below the purple EMA. It's below, okay, our magical put level from the daily chart. Okay, this is a 5-minute chart, by the way. All the time frames always in the top left. Okay, look how many entries there are. Notice how none of the entries are down here. Okay, are down here. Those are actually the sell spots. So you're probably really overwhelmed. You're like, Ellie, what time frame? Like you have all these arrows everywhere, things like that. Do you want me to break this down to you in a really simple way? You're going to notice something on this chart. Did price ever get above this purple line here until here? It did not. So if you really want to make this simple, this is what I do. This is how I was able to make 255% is I will short a pop, get a good entry, and I will ride it until it crosses over the 8 EMA. That is how I hit 255% on this trade. Okay? That is how you do it. Really simple. You don't have to there's so much stuff in my head. Purple line below, you hold. Above, you buy calls. That's it. It's really that simple. Okay, so now let's talk about math. Now, self-disclosed, I took Algebra 1 3 different times, and somehow I've been trading for 5 years and done quite well for myself. So, if you make $1,000, okay, on this first hit, okay, $1,000, and then you make 102%. Okay, $1,000 in account. That's a small account. Now, if you're, have a $2,000 account, you put that in there. Congratulations, you made $1,021.71 in about an hour and a half. Okay, pretty good money. Pretty good money if you ask me. So you get out. Let's say you got out here on this candle here. Okay, you got out. You saw the hammer candle. You're like, I'm good. But then what? It resets up. It resets up right here. So then you just buy the same contracts again, and all you have to do is put that $1,000 you made, okay, back into the trade. Why? Because this money here is profit, okay? This is profit. This money has not, okay, hit your bank account yet, all right? This money's just sitting in your brokerage. So you just take the money and you re-hit it because why? What's the worst case scenario? Worst case scenario is your profit money, okay? Your profits goes to zero, okay? And guess what? If your profits go to zero, what do you wind up on the day? Do you wind up red on the day or do you wind up green on the day? The answer is neither, okay? The answer is absolutely neither. You end up flat. But you know what? I'd rather be flat than red. Notice how it happens. You didn't actually lose any money. The money never hit your bank account. So it's not yours until you pay the IRS bill. Okay. So you take that money and you re-hit it. So you re-hit it. So that way, if you stop out here, okay, instead of $1,000 profit, maybe you only make 800. Okay. But where this gets magical is what happens on that re-hit? It goes nuclear, like 255% nuclear. Congratulations, you just turned your profit, okay, your profit money, not your money in your brokerage account or your money or your bank account, into now you turn it into 2,600. So now on this trade, you netted $3,300, okay, on a Friday afternoon. Oh, sorry, Friday morning. Friday morning, right? What was I spelled morning wrong, but whatever. What was your actual capital to make this amount of money? What was your actual capital? How much did you need to invest to get these type of returns? $2,000. Okay. $2,000. What was your risk? On your first trade, you would have risked $200. About, let's say 20% stop loss to make it easy. You put $1,000 in, you would have risked $200. But you just made 3,000. This is how you change your trading career. This is how you take a small account into a very large account. Because when you start adding zeros to these numbers, okay, zeros to these numbers, that is how you scale. That is what trading is. That is how you grow. So I hope you enjoyed this. Make sure you check out my YouTube channel, like and subscribe. I got a ton of content on there. I'm also going to be dropping a free course soon too. I'm going to pretty much just put all these other course guys out of business because I'm tired of hearing nonsense. But I digress. So hopefully you enjoyed something. And seriously, use this lesson. Right? You can take a small amount of money and turn it into a large amount of money if you just practice risk management. So hopefully you enjoyed. I will see you all on the next one. Peace.